Morning, folks. Welcome to this morning's edition of the MPC Markets Morning Call, 6th of January 2026. A bit of a take two here. We had a little bit of technical difficulties. I'm in the country at the moment, and our internet quality not quite as good as as in town. So I'll just run through again, and we're just we'll quickly skip through and finish up here. So yeah, but fairly positive overnight for equity markets. Financials and energy sort of led it higher overall. Really on economic hopes that obviously potentially a bunch of supply coming into the oil market from Venezuela, etc. And that obviously reducing inflation and cheapening and pushing economic growth has been which is always very good for the financials and the energy sector. It's a bit of I would be a little bit skeptical of the energy sector rally overall, because I think in this long term opening up $15 trillion worth of supply and the US being in control of it is potentially not great for oil prices long term. But we saw most of the major equity indexes rally yesterday, sort of bouncing out of those lows. And look, there was the liberation, as they call it, of Venezuela was fairly incident free as far as these things go, and doesn't look like it'd be necessarily stretched out or any sort of thing like the Ukraine. They seem to have put a president in overnight, or sworn in a president, so that's obviously a positive thing as well. So technicals looking very good in terms of all the major indices here at the moment, despite the fact that it's a little bit of uncertainty floating around, and Trump seems to have pulled back a touch on whether they're running the country or not, or etc. So the UN condemned them overnight, but UN condemns everyone. So as you can see here in this map, we really had those financials head higher, and then we're the likes of Palantir doing probably pretty well, military software, and these sort of bellwethers of the economy and CAT, etc., heading a little bit higher, and like I say, Chevron, Exxon heading higher. Exxon particularly having a decent exposure, Marathon Oil as well having a particularly good exposure to heavy oil processing, which we'll cover later on. As you would expect, not necessarily a safe haven, but there's a bit of a scramble going on just generally for commodities. They're cheap relative to equity markets from a historical context globally, and equity markets have rallied out of sight compared to commodities for nearly 2 decades now. And there's probably, we will see, and that's part of our major element, is that shift back to hard assets rather than, the digital economy, the critical minerals thing really saying things run higher, and that this is where you see the uncertainty really, where the level of uncertainty sort of play out is with people buying into those hard assets or those real assets. So silver had a great run last night, 6.5%, but silver's been incredibly volatile lately. The big move was copper, new record highs through $13,000 a tonne. I think I had my target at 13 or 14,000 when I wrote the outlook in December. It's gotten there really quickly. I think it was more around the 15,000 mark, but we'll see how things go. But we're through $6 a pound on COMEX as well, which is sort of getting back towards those record highs. I would expect that the Aussie market does pretty well. BHP, Sandfire, Rio, etc., and holds up our market today. And platinum making a pretty big bounce back, although as you can see they're only 1.6, down 1.6 for the week now, as opposed, and after a 6% rally last night. Lithium, decent little rally, 2%. Uranium, 8%. Things like Paladin now busting through. I haven't checked the short numbers on that lately, but at some stage, whoever it is that's short, it's going to have to do a big unwind. That could go on a big run. Bitcoin up 4.5%, and we're heading back towards heading back towards at least the lower or middle half of the range. Currencies, these big moves here, the currencies are looking a little bit dwarfed in terms of their movements overall. So just to give you some context around this Venezuela thing, obviously Venezuela has the largest oil reserve in the world. It's supposedly around $15 trillion to $17 trillion worth of barrel inventories, which is massive. But, roughly, if the US was to just take it, we're talking that's a third of the debt taken care of. And that gives you a little bit of context. I mean, bigger than Saudi Arabia, bigger than Iran, bigger than Canada, bigger than Iraq. We're talking more than double Iraq. To give you a bit of a context in terms of a geopolitical situation, Venezuela only being a hell of a lot closer to the US and having those reserves, and then gold reserves in Latin America, they've got the largest, 161 metric tons. But to give you some context, like Algeria, Libya, I mean, they're massive deposits in Africa, from a global context, and it really does compare. So it does. And a bunch of companies US companies that were operating in Venezuela had their assets confiscated quite some time ago, and then there is a few gold miners and there'll be a lot of legal challenges for those companies to come back and get their assets, which are in the tens, if not hundreds of billions of dollars. So there'll be the usual winners like Halliburton, etc., that get to go in and rebuild infrastructure. And a few, I think it was a company, Gold Reserves and stuff like that. So, and look, why this matters geographically, obviously 2,200 Ks from the US, and look, is a threat militarily with the Chinese, and a Chinese envoy was there talking with the Venezuelan president just prior to them taking him. And look, you think Cuban Missile Crisis, that was a huge thing in history where the Russians moved missiles close to the US, and it isn't much further from Cuba than the US is. Cuba's pretty not similar distance, but in terms of ballistic missiles, it's like a couple of minutes. Big winners there with Marathon Oil, Exxon, Aramco, which have got the biggest heavy crude processing plants. So Venezuela doesn't have light crude oil, which is very easily turned into diesel and jet fuel and fuel. Heavy crude takes much more processing, is much more expensive, but those three are the biggest. I went through and ranked capacity. Those three will be the big winners if that oil starts getting shipped for processing, in those Gulf of Mexico plants. So that's where and Chevron is supposedly as well. I think they're mainly through partnerships, but so that's why there's probably been a bit of a uplift in the oil, and we haven't seen the oil price go down yet. But I think that US having control of this really makes OPEC and OPEC Plus a bit of a toothless tiger, and I have very big concerns for oil prices long term, which is what Trump's wanted. So it's not like and he's been fairly aggressive so far. So I mean, this will continue to develop. We do have other things going on in the markets. The CES, which is the big tech expo in Las Vegas, going on at the moment. Jensen Huang from NVIDIA being the keynote speaker there. I dare say the sentiment coming out of that keynote will be very, very key for the investors' appetite for AI in 2026. So that you probably need to be watching the price action in the tech stocks and the chip stocks, etc., really closely in the next few days as that keynote's delivered. And I mean, not everyone's back to work. Obviously, we're fairly thin market still. We've got US employment as well this week, expected at 57,000. I don't envy economists. I think they'd be feeling very, very nervous, even remotely trying to predict that number. So look, we will, they're doing their best essentially. But if we get a big negative number, you could see the hope of lower oil prices, taming inflation, and helping economic growth for the industrial sector, and then lower interest rates because the employment's low. So there could very well be quite a decent start to the year, but I would imagine it's not necessarily in the sectors from last year. I would expect, particularly the Aussie market, to do well today with copper being higher. and breaking those records. Gold being a little bit higher, iron ore's chugging away close to $800. And the financial sector being the strongest sector in the US overnight as well. So that's our two biggest sectors are going to do pretty well. Our tech sector got hosed, and our healthcare sector is one of the worst performing in the world in 2025. I would expect, as people start to look at their outlooks for 2026, they stick out like a sore thumb, tech and healthcare in Australia, because the rest of the world's gone higher, and realised that there's not going to be much of an effect from Trump's policies, there hasn't been any policies. And our tech sector, cannot climb the wall of worry. But if we get both of those going and the materials sector, I think the Aussie's a pretty good bet this year, the Aussie index and the Aussie dollar maybe as well, because, if lower energy prices is always good for economic activity in the industrials and the real economy, not the tech economy. And I would fully expect that, the demand for our commodities, etc., will be pretty large. So, welcome back. Happy New Year for 2026, and we will talk again tomorrow.